Stocks rose across the board Thursday, powered by gains in shares of Alphabet and chipmaker Advanced Micro Devices on optimism around artificial intelligence. The Dow added 0.2%, while the S&P 500 climbed 0.8 and the Nasdaq increased 1.4%. Alphabet stock jumped 5.3% as analysts cheered the launch of the Google parent's newest AI model, while AMD soared nearly 10% after the company estimated the potential market for its data center AI chips could reach $45 billion this year. Data on Thursday showed the number of Americans filing new claims for unemployment benefits increased less than expected last week. But all eyes will be on Friday's highly anticipated November jobs report, which could hint at how quickly the U.S. economy is softening and may sway expectations about when the Federal Reserve is likely to begin cutting interest rates. Matt Stuckey, Chief Portfolio Manager at Northwestern Mutual Wealth Management, says he is paying close attention to two parts of the report.
First and foremost, the unemployment rate, which has actually been rising since April of this year from 3.4% all the way up to 3.9% or so. That's typically what you tend to see kind of on the precipice of actual monthly job losses. Now, we're not expecting that tomorrow. However, the longer that we see a rise in the unemployment rate, typically that means that job losses are around the corner. The other area that we're looking at is the wage part of the employment report. Wages are still too high for the Fed's comfort level.
Traders have almost fully priced in the likelihood of the Fed keeping rates unchanged at its meeting next week and see a more than 60% chance of a cut as soon as March, according to the CME FedWatch tool.
Macy's appears to face a buyout bid. Investors Arkhouse Management and Brigade Capital have made a $5.8 billion offer to take the department store private. That was according to a Reuters source on Sunday. The investors already have a big stake in the store chain, and the source says they have discussed the offer with management. The Macy's board reportedly met to consider the bid, but it's not clear what position they have taken. Arkhouse and Brigade believe that the firm is undervalued, according to reports by the Wall Street Journal. It says they could be willing to up their offer. There was no comment from any of the parties involved. Macy's crushed forecasts for earnings over the latest quarter. That was thanks to lower inventories and strong demand for beauty products. However, it's currently valued at just under $4.8 billion, meaning the bid comes at a premium of around 20%. Some industry experts wonder if Arkhouse and Brigade can actually execute such a big deal, though, having never done anything of this magnitude.
Wall Street's main indexes ended the week with gains on Friday, and the S&P 500 and Nasdaq closed at their highest levels since early 2022. Fueling that, a robust jobs report that lifted investor optimism about a soft landing for the economy. The Dow added more than 0.3%, while the S&P and Nasdaq each rose roughly 0.4. It was the sixth straight week of gains for the S&P, the index's longest weekly winning streak since November 2019. Friday's non-farm payrolls report from the Labor Department showed the economy added more jobs than expected in November. That led investors to shift bets about when the Federal Reserve would cut rates. The consensus now May instead of March. But what the market expects and what the data-dependent Fed actually does may not match up, says Tom Hanlon, National Investment Strategist at U.S. Bank Wealth Management.
The Fed meets next week. They conclude their meeting on Wednesday. We'll get a new revised outlook from what the Fed sees for interest rates. But that gap between what investors are looking for and the Fed is putting forth in terms of their expectations is the biggest driver for market volatility through the remainder of this year and into 2024.
Other data showed U.S. consumers felt inflation pressures easing, snapping 4 straight months of negative sentiment. In company news, shares of megacaps, Nvidia, and Meta platforms each gained nearly 2%, while Alphabet dipped 1.4%, giving up gains after an AI-led rally in the previous session. Honeywell shed 1.6% after the industrial firm said it would buy air conditioner maker Carrier Global's security business for over $4.9 billion. Carrier shares rose 4.5%. And Paramount Global soared 12% after reports of takeover interest in the media company. Peer Warner Brothers Discovery jumped 6%.
From the last big central bank push of the year to Bitcoin's stellar rally, these are the stories to watch in business and finance. The Fed gives its final 2023 policy statement on Wednesday. Holding rates seems like a done deal, and projections that the Fed is poised to start lowering rates in early 2024 have helped fuel a huge rally in stocks and bonds. U.S. November inflation data on Tuesday could provide a wrinkle for markets. The Swiss National Bank, Norway's central bank, the Bank of England, and the European Central Bank all meet on Thursday. All but Norway are tipped to stay on hold. Comments from rate setters have prompted traders to double down, and they are likely to pounce on any clues central bankers are starting to come around. China's economy is sending mixed signals about its health. Retail sales data on December 15th will provide an update after figures in recent days showed a surprise contraction for imports. That suggests subdued domestic demand, even as exports unexpectedly rebounded. Bitcoin is back to levels not seen since before the 2022 collapse of some high-profile crypto firms. Analysts say the gains are fueled by hopes the U.S. might approve applications for a spot Bitcoin ETF, as well as investors betting on Fed rate cuts next year. But those outcomes are far from guaranteed, and JP Morgan has called the Bitcoin rally overdone.
U.S. stocks inched up on Monday, but managed to close at new highs for the year, ahead of potentially major market-moving factors this week that include inflation readings and the Federal Reserve's policy announcement. The Dow and S&P 500 rose about 0.4% each, while the Nasdaq added 0.2. Market watchers increasingly believe the central bank is done with its interest rate hike cycle and could potentially cut rates in the first half of next year. Taves Asset Management CEO Phil Taves said that and lower yields on 10-year treasuries are contributing to the positive sentiment on Wall Street.
So sometimes it's not what the good news is that causes a rally, but rather a lack of bad news. And I think that's where we are right now. Certainly the fact that the Fed has been on hold, and we hope that they stay on hold, and that the 10-year and other rates have come in so considerably from the high of 5 on the 10-year, as an example. You know, the decrease in things like the 10-year is the equivalent over the past 3 weeks to the Fed lowering about 90 basis points. So it's a significant change, a significant kind of easing in the economy that creates an environment where stocks can drift higher.
Investors will watch the Consumer Price Index data due on Tuesday, which is expected to show headline inflation remaining unchanged in November. While on Wednesday, the Producer Price Index comes out, along with the last interest rate decision of the year from the Federal Reserve. Stocks on the move included chipmaker Broadcom, which jumped 9% after Citigroup resumed coverage of the shares with a buy rating, while Cigna soared 17% after it ended its takeover bid for rival Humana and announced a $10 billion share buyback plan. And Macy's surged 19% after an investor group made a nearly $6 billion offer to take the chain private, according to a source.